Welcome to the PrePass webinar, Increasing Trucking Insurance Costs and Ways to Save Money. I'm Evan Lockridge, your host and Content Marketing Manager for PrePass Safety Alliance. PrePass provides way station bypass and toll payment services, as well as data dashboard tools for improving safety, efficiency, and cost control. Today, we'll be discussing why insurance rates for motor carriers are skyrocketing and what you can do to get them under control. Before we get started, a reminder that we have muted all lines. So if you have a question, type it into the questions box located in the webinar panel. We will answer questions at the end of the presentation. This webinar is being recorded and all attendees should receive access to the recording within about 24 hours. Also, at the end of the webinar, you'll receive a quick survey, so please take a few moments to provide your feedback. At this time, I'd like to welcome our speaker, Joe Hutelmyer. Joe has nearly 40 years of experience in the trucking insurance arena and is Chief Operating Officer at the Motor Carrier Insurance Education Foundation. This group is dedicated to helping educate motor carrier insurers and insurance agents so they better understand the motor carrier industry, their insurance needs, and what they can do to help their insureds become a more desirable risk. This group also keeps insurance providers abreast of the problems and issues affecting the world of trucking. Joe?
Thanks, Evan. Good afternoon, everybody. I'll start off by saying that I'm pleased to be here. Thanks for the invite. And I have made my living insuring motor carriers since 1981. A couple takeaways from today's session: what to expect in insurance costs over the next 5 years, what insurance are looking for in underwriting motor carrier, the effective SMS scores on underwriting your insurance, and how to best position your operation to protect against nuclear verdicts. Now, unless you are living in a cave and have no access to any information, you've seen a ton of headlines, and you can see on the next slide that some of the media headlines since 1/1/2020, and I'll just go through a few of them, but none of them will be a surprise to you. The sad reality of trucking insurance 2020, drilling deep, what a trucking lawyer thinks about nuclear verdicts, what trucking insurance crisis, part 2, lawsuit abuse, brutally tough, insurance rates hammering trucking companies, are nuclear verdicts out of control, rise in truck crashes, large payouts expected to boost insurance renewal rates this year. Better safety systems could help fleets avoid nuclear verdicts. And the whopping $411 million verdict in Florida is said to be the biggest ever, but one that'll never be collected. Next slide. Why are insurance premiums up? Well, it's no different than why your prices will go up. The insurance companies insuring motor carriers have lost money over the last 10 years from basically 2010 to 2020. They're losing between 8 and 15 cents on every dollar. It's not only frequency, and while frequency appears to be improving, severity is getting worse, and getting worse on an exponential basis, not only just climbing gradually. If you look at the 2018 statistics, show that fatal crashes are down, but for motor carriers, they're up slightly. Looking at inflationary factors for medical and the cost to repair units, medical costs are up an average of 35% over the last 10 years, and the cost of vehicle repair is up 24% in the last 6 years. Again, we talked about no underwriting profits since 2010, and in 2019, transportation markets recorded $4 billion in underwriting losses. The reason: nuclear verdicts, which we'll discuss, the reptilian theory, which we'll also discuss, and personal injury litigation financing. I don't go into the personal injury litigation financing over the next couple pages, but just a brief thought is there are people now that invest in motor carrier claims. If they see an accident happen somewhere, they will go to an attorney and say, we'll cover your costs. We want you to go after this truck line. It looks like a loss. We can win. And there are even basically people that are sharing and investing in financing litigation against motor carriers. Next slide. Nuclear verdicts. ATRI, the American Transportation Research Institute, recently put out a study on nuclear verdicts, and the study showed that over the past 5 years, there were 300 court cases in excess of $1 million against motor carriers. From 2010 to 2017, the average verdict was $5 million. In 2018, the average verdict jumped to $22 million. And there were 71 cases with verdicts in excess of $10 million. One of the things that this doesn't pick up is how many claims were settled out of court where there weren't verdicts. And those numbers are astronomical when you start talking to insurance carriers. Again, it might not be 10 million, it might not be 44 million, but we're seeing verdicts in well in excess of $1 million, or settlements well in excess of $1 million, just because the threat of going to court where you could get a verdict that is substantially higher will force people to look and settle sooner. Other reasons that for the large increase in nuclear verdicts, if there's children involved, and this is on the next slide, we're looking at a $1,600 increase over what would normally be paid. Spinal cord industries, double jury verdict awards, and the average is $3.5 million. Rear end crashes in work zones are killers for, no pun intended, but the average there is $7.25 million. And spin and roll crashes, just because of the visuals involved, we're looking at a $15 million average. The next slide, we address something that you may or may not have heard of, and basically it's called the Reptile Theory. With the Reptile Theory, plaintiffs' attorneys try to reach the reptilian part of the juror's brain. Insurers instinctively want to protect their family and community from danger, and they do so through their verdict. There really is no focus on fault or facts. They focus on fear and revulsion. With today's environment, everybody having a camera on their phone, it's no surprise that the videos that are produced at trials are horrendous and just cause the jurors to react in a way that is knee-jerk, and they're trying to punish the defendant trucking company and send a message to the industry. The Reptile Theory, as we said, there's no focus on fault or facts. And a couple examples, there was a case in Texas with a motor carrier, and that motor carrier did nothing wrong. The opposing truck line, or the opposing plaintiff, crossed the center lane, ran into our motor carrier, who tried to avoid it, moved as far to the right as he could without going off the road, and the plaintiff slammed into his vehicle. It happened to be raining at the time. While the insured did nothing wrong, was not exceeding the speed, tried to avoid the accident, the trucking company safety manual said that in the case of rain, the motor carrier, the driver is supposed to pull the vehicle over to the side of the road, and the jury awarded a large settlement for the plaintiff because the truck driver did not follow the guidelines that were in the safety manual. We see a lot of cases now where we have drivers questioned on safety rules and guidelines that actually have nothing to do with the loss. But if you get a driver that says, well, I wasn't aware of that, or I didn't know that, or or answers the question wrong, then the response they're going to get from the plaintiff's attorney is the motor carriers hiring drivers that don't even understand the guidelines and rules they're supposed to follow. Insurance rates, well, this is not positive news for anybody here. The insurance rates have been rising and have been rising over the past 5 years, even for motor carriers with favorable loss experience. We've seen motor carriers with good experience with a 10 to 15% average, but still, even so, losses are outpacing the premium increases that insurance companies are getting. Legal expenses are increasing exponentially, and the cost to defend a motor carrier is astronomical these days. For 2020, the industry predicts improved frequency due to the pandemic and the roads being less crowded and fewer miles driven. But to offset that, claims are getting larger, and it's offsetting the improvement in frequency. Next slide. Insurance rates, and this is based on people that I've been conversing with, and virtually all of the motor carriers that insure, or all the insurance carriers that insure motor carriers, are members of our group, and we've been taking polls. And what we're looking at for a low risk motor carrier with good experience, probably an 8 to 10% increase next year. Average motor carriers will probably be looking at a 15 to 20% increase. If you're marginal, you're talking 25 to 35. And new ventures, less than 3 years in business, you're looking at 35 to 50% increase if there's even insurance available. What we're seeing is, because of the adverse results of new ventures and the ability for insurance companies now to track that information, what we're seeing is a number of insurance carriers that have previously been writing new ventures are exiting that marketplace. When you start looking at excess limits, and I'm talking about limits in excess of $1 million, the capacity is shrinking dramatically. And what I mean by that is that there are fewer and fewer insurance companies that are willing to insure motor carriers excess of that $1 million. In the past, the working layer, and a working layer is basically where you expect the majority of the losses to occur. The working layer for motor carriers has always been $1 million up until the last 4 or 5 years, and now we're looking at 2 to 5 million, even up to $10 million as a working layer as the losses increase. Next slide. How do we fight nuclear verdicts? How do we fight adverse judgments? Well, we're talking about driver management best practices, and the first item, that bullet point that we have here, is driver selection. This is especially hard today with the driver shortage. It's extremely difficult to find good, safe, qualified drivers, and it's very, very important to minimize turnover, only because turnover is another indicator that insurance companies use to determine or to predict losses, and the companies, the motor carriers with the lower turnover, traditionally have better results than those with higher turnover. Training is another thing that'll help. Carriers manage their risk better through proactive coaching and training. Cutting corners today just doesn't work if there's a loss. There's a lot of data that's now becoming available, whether it be through the ELDs or cameras or anything that the motor carrier has, and they really need to use whatever data you have available to the fullest, whether it's tracking somebody's braking habits to attention, even to verifying medical conditions for drivers. But the biggest thing is, if you've got a safety manual, make sure that your drivers know and understand that safety manual and they follow that safety manual, because if they do not, it'll be used against you in court. Retention, that's driver retention, which we talked about earlier. Retaining drivers now is extremely, extremely important. And you guys know the reasons for that. I don't have to tell you. Safety policy and handbook. Carriers should build a top-down safety culture and develop a handbook that drivers must understand and adhere to. This is exactly where the Reptile Theory is going to begin their attack, and they will do anything from digging up drivers' past history to digging up other drivers' history for the motor carrier. And even if the driver involved in the loss has a clean MVR, uh, if there are other drivers that are hired by the motor carrier whose motor vehicle report is not as clean, they will go to the extent to prove to the jury that this is an unsafe truck line, because they hire less than safe drivers. Next slide, we talk about technology best practices, and you guys are all aware of what's available out there now between collision avoidance, lane departure, blind side warning, adaptive cruise control, the ELDs that we talked about, event recorders, and cameras. The costs of these are still high, especially with the expenses that you guys are incurring these days, with insurance prices where they are, with fuel prices where they are. Your costs are not coming down, but um, there are some insurance companies out there that are willing to share the cost for some of these uh, technologies. And you can be sure that if there was an accident happened and a child was killed, the plaintiff's attorney would ask, it was a $1,200 worth a month or a year investment worth a child's life. And in those cases, the motor carrier is never going to win. Cameras, we talk about inward and outward facing cameras, and we hear an awful lot of pushback about inward facing cameras, and how it affects driver retention. And what we're seeing more often than not is that um, the rear facing cameras do pick up trends. They do pick up things that the drivers need to work on. Sometimes drivers do not even recognize issues that are affecting them, whether it be fatigue or distracted driving, and having that rear-facing camera can help mitigate a nuclear verdict if you are using those cameras to train and to educate your drivers. Uh, we talk about a lot of different things. Inward cameras help a lot, because in many cases, if there's a loss, the plaintiff's attorney is looking to claim that there was distracted driving. If there is an inward facing camera that shows that the driver was attentive and did everything he could to avoid the loss, then that's a positive. Um, Conversely, if there's a situation where the driver was bending over to pick up something or picking up his phone, the insurance company can use that to try to settle the claim quicker, knowing that if it goes to court, it'll be used against the motor carrier. Uh, Conversely, we have seen insurance companies prevail in quite a few cases where uh, the motor carrier was not at fault, and because they had the outward facing cameras, they were able to either settle a claim or deny a claim just because of the camera footage. Next page. The next best practice we're talking about is your insurance partner best practice, and you can start with your insurance agent, and the key is making sure you have a trucking specialist insurance agent, someone who knows the trucking industry, somebody that knows the risks and exposures that the trucking presents, and somebody that gets to know your operation and can provide more than just price. Uh, we currently have about 180 insurance agents that are members of the Motor Carrier Insurance Educational Foundation. And these members, in order to maintain their TRS designation, have to secure 15, 16 hours of education every year in order to maintain their designation. And what we try to do is we educate our insurance companies and our members on things that are happening, whether they be regulatory, legislative, whether they be judicial, trends that are affecting the trucking industry, anything that's going on that we see motor carriers, whether it be fuel prices increasing, whether it's different demands that shippers are putting on motor carriers, as well as what coverages are available and what coverages should be provided for motor carriers. Again, an insurance company, just like an agent, you want to be insured by a truck specialist insurance company, somebody that's not afraid of $1 million loss. What we see a lot of times is a motor carrier goes with an insurance company that it may do commercial auto insurance for contractors and plumbers and electricians, and all of a sudden they write a motor carrier because they see the potential for large premium. And the first time there's a claim, and we've heard this story from truck repair shops so many times, where you'll get an adjuster from one of these companies they'll go to try to adjust a claim on a heavy duty unit, and we'll go into the repair shop and say, gosh, I've never seen anything this big before, and can I get up and sit inside the unit? And you do something like that, and the truck repair shops, it's like you got a target on you. It's like, this guy doesn't have a clue. We can charge whatever we want to repair this vehicle. And again, somebody that's not going to be scared by a large claim, and actually somebody that is willing to help you to make yourself better, whether they do it through loss control, loss prevention practices that they can help you with, or whether they'll share in the loss or in the cost of technology. Truth and trust, it's a two-way street. Be honest with your insurance carrier, with your insurance provider, and trust them, and they will be honest and trust you. I've been doing this a long time. The object of our business is a win-win for everybody, is a win for the motor carrier and a win for the insurance company. So the worst thing that can be done is misrepresentation on anybody's part, whether it be number of units, whether it be miles driven, whether it be territory that you drive to. You can be sure that these insurance companies are going to be checking your miles. They're going to want IFTA reports, and there's too much information out there these days where it's just very, very, very easy to pick up if somebody is misrepresenting their operation. Finally, SMS scores. The first thing an insurance company looks at when an app comes in is an SMS score, and there are arguments for and arguments against using SMS scores, but the most important reason and the main reason why insurance companies use SMS scores is to be able to defend you in court, be able to defend the motor carrier in court. Plaintiffs' attorneys are going to use SMS scores against you in court, and the insurance companies must be able to defend. Motor carriers need to develop strong partnerships like we talked about, and their agents representatives. With respect to SMS scores, some are looked upon more seriously than others. Uh, the number of inspections, if it's a small number, the numbers aren't credible. But at the same time, if the out of service numbers comparing to the industry are high, it's going to be used against you in court. And when you start looking at things like unsafe driving, um, the crash indicator, there are things, hours of service can be controlled, and really with ELDs are not as much an issue as they have been in the past. When you look at vehicle maintenance, insurance companies are going to be less concerned uh, about a taillight violation than they are with a number of brake violations. Looking at controlled substances, and if you've got drivers that are cited for a controlled substance violation, that's going to be a red flag, and it's going to be used against you, and it's going to hurt as far as the price of what you're going to pay for insurance. Um, Hazardous material compliance is not all that important, and then driver fitness, um, but SMS scores are very, 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 very valuable, and it's something that both sides are going to look at in the event of a loss. Next slide, please. Manage your profile best practices. Again, these are things that need to be addressed, and if you look at what we're looking at here, the top 3 items we're talking about refer to your drivers. Fatigue, making sure drivers are well rested. That's something that it's the first thing, and we see an awful lot of serious cases. I believe the Walmart case in New Jersey that got a lot of headlines. The driver was fatigued. He admitted he was fatigued. The payout there, well, the case was settled, and the numbers were well in excess of $10 million. Distracted driving is something that we see almost every other unit driving a private passenger car these days. You see somebody on their cell phone, somebody picking up something. It's not unusual for me to see a driver looking at a movie or a TV show or a football game while he's driving down the road. So it's really hard for the motor carrier that has to deal with the um, private passenger autos and how they're acting as a result of distracted driving, and for them to have the same issue. It will be something that'll definitely put you out of business should there be a claim. Driving under the influence, we addressed. It's just something that it's a flag for every insurance company out there. If they see drivers with DUIs, it is going to be very, very, very difficult to get coverage. If you do get coverage, it is going to be very expensive. Lack of equipment maintenance, again, that's something we look at when we're from the insurance company side when we're talking about SMS scores. And again, if you have maintenance issues where you get a number of out of service because of brakes or something serious, then it's going to present a flag not only for the insurance company but for the plaintiff's attorney. Inexperience in a properly trained driver, we talked about that briefly, and driver training is extremely important, and it's something that has to be taken seriously from day one. New ventures continue to be a challenge just because there's only 3 or 4 insurance companies out there that'll insure new venture operations these days. And if they do, you could be paying up to $20, $25, $30,000 a power unit for a year for auto liability coverage only for a new operation. Midwest a little bit less, but if you start looking at Texas, Florida, Illinois, the Northeast, California, the prices are going to be $20,000 and up. It's pure supply and demand, and the reason that the prices are so high is because the results are so bad. Business plan. Real important to have a business plan, something that's followed, something that not only is talking about where you want to be revenues wise, but where you want to, what type of commodities you want to be hauling, where you want to be hauling those commodities, what you expect in drivers, whether it be driver retention, whether it be driver salaries. These are all things that in court will make the motor carrier look a whole lot more professional. But if you have a business plan in place and you're not following the business plan, then it's kind of worthless. So if you do put a business plan in place that is extremely detailed, make sure that the business plan is adhered to. Personal MBR and MPSP, it's something we talked about briefly earlier. Basic scores and out of service numbers. Again, it's the first item screened by underwriters and will either get you to the next step or get you put in the discard pile, and or we're going to refer you to somebody whose pricing is going to be twice what our pricing is. Next page. Insurance alternatives. Again, depending on your size, depending on your financial situations, sometimes there are alternatives that can help to alleviate some of the cost, and the biggest way is for the motor carriers to share in some of the risk. How would a motor carrier do this? They could do it by a deductible program. And a deductible program could be, as low as $1,000. Most insurance companies are reluctant to do $1,000 deductibles on automobile liability, but if financially you're able to share in some of the risk and can do $5,000 or $10,000, sometimes that'll help mitigate your cost, and the claims will still be handled by the insurance company, and you could reduce your cost anywhere from 7 to 15%, depending on where your history of losses occur. Self-insured retentions, basically you are saying I am going to insure up to a certain amount. And normally what we're talking about is $25,000, $50,000, even $100,000, if you can financially handle it. When you are a self-insured retention, the insurance companies are going to be looking for an escrow deposit of some amount based on prior losses. And if you are financially able, just the fact that you're willing to share in the losses is going to help the pricing of your insurance coverage and help build a partnership with your insurance carrier. Risk purchasing groups, there are a few out there, not many now. If you can get into a risk purchasing group with like members, you can probably save up to 10% in your costs, and sometimes there are other benefits involved when you get into a risk purchasing group as well. Risk retention groups, again, they can be beneficial. The key there is to make sure that you get into a risk retention group with the same values and the same safety concerns as you are, so that should there be serious losses, and should the loss numbers, you're going to be sharing in the losses, not only your own losses but the losses of others in the group. And the same can pretty much be said for captives. Risk retention groups and captives are similar, but different, and and your insurance agent can really help you to determine if you've got enough size that it makes sense for you to go in that direction. Next slide. Defendable position. The best thing you can do is, before an accident happens, is to put yourself in a position to defend in the case of loss. We talked about best practices earlier. Pre-crash underwriting, you should be underwriting your own operation, and your agent and or your insurance company can help you to underwrite your operation. Are you doing everything that you should be? Are your files up to date with respects to drivers? Are you maintaining your units, and are you keeping track of your vehicle maintenance? These are all things that are going to be discoverable in court if there is a claim. Are you training your drivers accurately? Are you educating them? Are they safety conscious? Are you talking to them if there are, and basically counseling them if there are issues with the driver prior to a crash happening? Post-crash management, the key is, number one, report a claim right away, but have your driver take as many photos as he can, get witness names and addresses, um, get any information that they can, and in doing so, you will help mitigate some of the loss. It is guaranteed that everybody else at the crash site is going to have cameras. They're going to be taking pictures. How you act is going to be very, very important. If the driver is acting belligerent and showing signs of serious aggravation, that's a problem. If drivers are admitting to things, that's a problem. It's the type of thing where the drivers have to be prepared. They have to know what they need to do in the event of a crash before a crash happens. And if a crash never happens, they're still prepared. And finally, you really need to stay in contact with your adjuster and with your insurance company and with your agent on the loss. And don't be afraid to ask where we are, what's happening. What can I do? If the insurance company needs information, they don't need information to hurt you. They're looking for information to protect you. And if it means that if the information you provide shows that you were at fault, then all it's going to do is give your insurance company incentive to handle that claim quicker, to see if they can settle out of court, admit, okay, we were wrong, we're going to pay you X amount of dollars, because litigation avoidance, which is the final best practice here, is probably the biggest key, especially when we start looking at nuclear verdicts and the reptile theory. If you're at fault, the insurance company wants to settle, agree to settle, avoid a trial. Let's mitigate the loss. Next page is PrePass Benefits. And I'll go through these briefly, but the PrePass folks on the phone, on the website, can help you a whole lot better than I can with respects to this. But when we start looking at PrePass Benefits, Inform software can help with your SMS management, something we talked about as extremely important. Having a toll transponder reduces the risk of crashes from stopping to pay tolls. And in my 40 years, you don't know how many claims we paid where the motor carrier did not slow down quick enough and either rear-ended another vehicle at a toll booth or took out the toll booth itself. PrePass alerts provide warnings to truck drivers via the Motion app. Bypass provides efficiency and profitability by rolling versus stopping. As previously noted, it also avoids crash potential from the exit and re-entry to roadway. All of that contributes to good risk management, which is a key to claim prevention and getting a better insurance price. Total cost management adds the profitability and sustainability of the fleet's risk management by reducing overhead expenses. And Evan, now I am turning it over to you.
All right. Well, thank you very much, Joe. In just a moment, we're going to get to your questions. So if you have a question, type it into the questions box located in the webinar panel. Now, if we do not get to all your questions, we'll respond to you directly with the email you provided at registration. Before we get to your questions, this brief message. PrePass is the leading truck weigh station bypass and toll payment platform in North America. The service allows qualified carriers to bypass weigh stations at highway speeds and also provides driver safety alerts, electronic toll payments, and informed safety and tolling software. More than 600,000 commercial vehicles from more than 77,000 fleets utilize PrePass services. Relative to insurance costs, PrePass helps carriers improve safety scores and reduce the potential for crashes. Contact PrePass for additional information online at prepass.com. Now let's get to your questions. First one we've gotten here, Joe, is someone wants to know, why is it important for vehicles to have forward and rear facing cameras, and what's the benefit? You mentioned those in your presentation.
Yeah, and again to reiterate, we get a lot of comments from motor carriers where we're suggesting cameras, or the company is recommending cameras both forward and rear facing. And the pushback we're getting is our drivers don't like it. It's Big Brother watching. Uh, and yes, it is, and no, it isn't. And as we discussed, plaintiffs' attorneys are going to use everything they can against us. And if we have something that we can prove that our driver was attentive, if we can prove that our driver did everything he could to prevent the accident, and if we have a forward facing camera and rear facing camera proving that, then we're in a whole lot better position to avoid going to court. And if we go to court, we're in a defensible position, where otherwise it's very, very difficult. And again, it comes down to a plaintiff who may be seriously injured word against a motor carrier, truck driver. And the way the litigious system is now, unless we get tort reform in place, and it's highly unlikely in the near future, the truck line is going to lose.
I've heard some fleet people say they are hesitant to get inward facing cameras for a couple of reasons. One, drivers worried about driver resentment. The second being they're concerned that they could capture their drivers doing something wrong that led to a crash. What's your response to that, Joe?
Well, that helps the insurance company at the same time, because if the driver did something that led to the crash, then the insurance company is going to look to settle it extremely quickly. It's going to mitigate the dollars paid. It's really going to help the insurance company. It sounds crazy, knowing that you were at fault, but if you know that up front, you're not going to spend $200,000 trying to defend a claim that you're going to lose and pay $500,000 for anyway.
Okay. Next question here. Someone wants to know, is online and our app related training or app related programs a viable alternative to in-person safety training?
Yes, it is. As long as it's documented, and that's the key. You don't want something where somebody can go online, click on, turn the training module on, and then go someplace else and eat lunch or go watch a football game or whatever. You want to be able to have online training where there's questions and answers, or some way that can be monitored, where you actually see that the driver that was watching the training online was paying attention and was there the entire time.
And you mentioned about documenting the training. What should that documenting of the training include?
It should be whatever you can, um, and it should be in the driver's file that on such and such a date he attended a training session on, um, you know, driving in adverse conditions or whatever. And there's a number of these available out there, and some of them are very, very, very good. And from that standpoint, put when they did it, how long they did, if they answered questions, that they answered the questions correctly, um, but document everything they can about the training that they participated in, because it may be that client that training the driver took, and say, like we discussed, driving in adverse conditions. If there was a loss and there were adverse conditions involved, you could prove, that the driver was prepared, was educated, did know what to do, and again, we're talking about mitigating claims.
Okay, our next question. Someone wants to know, what is the industry standard premium cost per mileage? I guess the standard premium cost per mile.
There is no industry standard premium cost per mile, and that's because you've got different costs for flatbeds versus tankers versus um, reefers versus dry box. Intermodal rates are different than pure long haul rates. So it's really hard to say on a per mile basis. Um, because there are some operations that are extremely efficient, and they may be operating 120, 130 miles, 1,000 miles a year, versus somebody that's operating 80,000 miles a year, and because of the variables we discussed, they could be paying pretty much the same amount per mile.
Okay, our next question has to do with a risk purchase group. Someone wants to know, how large should a fleet be to join one?
Um, it- as far as a risk purchasing group, I would say you really need 50 units. I've seen some people go in with 25 to 30, with very, very, very strong financials. But I would say a minimum of 50 units, and if you really want to start where it's really going to be appreciable, you're probably talking closer to 100 units.
Okay, and a related question here: what is the downside of a risk retention group or a captive?
Well, the downside of risk retention grouping or captive is that if the results are bad, then you could end up paying more. You basically are becoming an insurance company, and you're sharing the losses with the other members of the group or other members of the captive. If you're big enough, if you're big enough where you can afford your own captives, then you are basically self-insuring, um, with tax benefits. As far as a risk um, retention group, if you're in with 50 other motor carriers and they all have the same values as you and pretty much the same demographics, you wouldn't want to get into a group where you had people doing dramatically different things. And by that, I'm really talking about, you know, if you're in a group with all flatbed operations, then you pretty much can predict the exposure and predict the type of losses you're going to have. Where if you're across the board and you got some intermodal, you got some cross border, you got different operations where you have different exposures, then your exposure is going to be greater. And if you're a pure vanilla truck line, saying operating from, Nebraska to Richmond, Virginia on a regular basis, um, your exposure is a whole lot less than somebody that's going from New York City to Miami, Florida, going down the I-95 corridor. So the risk on that is going to be worse for the East Coast motor carrier versus the Midwest motor carriers. So, and if you're in a risk purchasing group, where the costs per unit are the same, then you're going to be bearing a little bit higher risk than you would on your own.
All right, and then also in that same area that we've been discussing, our next question: for determining a self-insured retention, what is the best suggested benchmarking technique to determine the financial amount or risk to take on?
How strong are your financials? That's probably the biggest thing. And if you've got a good history of your operation where you are aware what your frequency is, because if you're looking at a self-insured retention, you're basically looking at taking frequency out of the equation for the insurance company. And say you have a 25,000 or $50,000 self-insured retention. If you have if your history shows that you routinely have 15 claims, under that, and they average $5,000, then you can pretty much predict, what your exposure is going to be in that level. What you're doing there is you're basically saying, I'm taking the small ones out of the equation. You, Mr. Insurance Company, that can handle the claims for me, but I'm going to pay for them. And what you're doing is you're insuring yourself for the larger loss, for the excess loss.
Now, in your presentation, you talked about safety measurement system scores. Why are SMS scores so important in underwriting when they're using old data as a measure? And according to this person, that the jury is out on their crash predictability.
I agree with that person on both accounts. The data is old, and their jury is out on crash predictability. But when you go to trial, it doesn't matter. What we've seen is that is the very first thing that the plaintiff's attorney look at, and you can fight the old data, and you can fight whether the numbers are credible or not in court. But basically, what you're arguing something that somebody is seeing, that you are an unsafe operation because of your scores compared to your peers, and it's very, very, very difficult to convince somebody otherwise.
Kind of like fighting City Hall, eh?
You got it.
Next question. What are some of the top 2020 insurance carriers and/or insurance brokers?
I would be happy to answer that one via email afterwards, but I'm afraid I'd leave somebody out, and then I'd be getting phone calls and nasty notes, nasty emails for the next couple weeks if I forgot somebody. But I would be happy to answer that one after the fact.
Okay, that sounds fair. Well, all right, that is all the time we have for our webinar. Please do not forget to fill out the short survey, which you'll see in just a moment. Also, don't forget to visit the PrePass website at prepass.com, where you can read blogs and white papers that can help your operations, as well as listen to podcasts on current topics in the trucking industry. Also, you can find the Motor Carrier Insurance Education Foundation online at mcief.org. I'm Evan Lockridge for Joe Hutelmyer and everyone at PrePass. Thank you for attending today's webinar.